You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. The Futures Rundown is brought to you by T4 Futures and Options. Elevate your trading experience with the T4 Futures and Options trading platform. Whether you prefer desktop or mobile applications, T4 delivers low latency and professional grade functionality for both traders and brokers. Take advantage of theoretical sheets, strategy solver, MBO, advanced charts, and a suite of powerful features to enhance your trading strategy. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody, that music means we are back. It is Wednesday, time to roll out the red carpet to the futures market, see what's lighting up the tape out there. Spoiler alert, it's a lot. So hope you're down to talk about a lot of products here on the show this week. My name, of course, Mark Longo from theoptionsinsider.com. Reminding you, if you're just listening to the Futures Rundown, great, have a good time. You're missing out on the rest of the network if that's the case. And of course, when you're ready to make the leap, we do talk a lot about futures, including a frequent guest of this program making an appearance on the Pro Q&A session yesterday. Our good buddy Dan the Man Gramza, that guy, you're almost hard-pressed to find a segment of the futures market that he is not very well versed in. You folks took him to the mattresses yesterday. Questions about just about every asset class under the sun. It was a great time. You can check it out for yourselves. Participate in all the future sessions as well as Options Oddities, the live streams, all the giveaways. Theoptionsinsider.com/pro is the place to go to learn all about that. As we learn who's joining us on the old program today, making a return appearance, even though it's been a while since we've chatted with him, Mr. John Seguin, the senior technical analyst and educator over there at the firm we know a thing or two about. Heck, I was just talking to his other half a little while ago on OBC. Yes, it's the good old market taker mentoring, what the cool kids call to Mr. John, welcome back to the Futures Rundown, sir.
Good to be back, Mark. Thanks.
I just realized we haven't talked with you since the end of last year, December 18th. So pre-Christmas. Yeah. So a little bit's happened since then. We'll get to all the current stuff in a second when we get to the trading pit. But before we dive into that really quickly, John, let's start there. Give us your thoughts on the just insane tumult we've seen in the markets pretty much since the start of the year. So we'll get into this week's stuff in a second.
Yeah, I track dimensions, both horizontal and vertical dimensions, and these are by far the biggest numbers I've ever seen. The S&P is running at like 5 times what you would consider normal, probably a 40 or 50 point range on a day, and it's moving 5 times that. I think just maybe a week and a half ago, we moved the length of an average month and literally hours after the tariffs were delayed 90 days. First, when the tariffs were announced, then when they were delayed, we seen moves that, I've been doing this for 40 years. I haven't seen moves like this in ever. And what my one suggestion to people would be the CME group, if you're trading futures, they do a lot of micro contracts. Until volatility starts to taper off, you might want to look into some of those because the margins and the risk is extraordinary.
And the movements, as he pointed out, are certainly extraordinary. So let's get to it now, listeners. Brace yourself because it's time to enter the trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, listeners, it is time to get down to business in the futures market. This week, we're going to break it all down, moving to the upside, to the downside, the volume, let's see what trends are developing for the year. But before we do all that, John, you are our guest. And like I said, we haven't talked to you in a while. It's yet another wild week. In fact, as we're talking, you mentioned the equity markets, at least, doing a month's worth of action and movement in the course of a single day. We're not quite that extreme today, but we are back in the 150 or so point intraday range in the S&P. That's just kind of normal now, listeners. That's just kind of the world we're all living in. And of course, that translates into a lot of vol and a lot of other asset classes as well, listeners. So a lot of fun going on this week in the markets. John, what is catching your eye out there this week, sir?
Couple things. First, we've had the equity markets work their way back, and we had some good news, I believe, from the Treasury Secretary that talks with China are improving. And I believe that's the reason why we saw some of the move yesterday and the strength again today, quite a bit higher open this morning in the S&P. So there's hope when it comes to the tariffs, and also one market that's been going down very hard is the U.S. dollar, and gold has been going up. They move in opposite directions often. So finally, the proof that I think traders believe that things are going to get better down the road is that the fact that finally crude or gold turned over and rolled over and headed down, got hit pretty hard. And then the dollar's starting to show strength. So this is all, that maybe that they believe that the tariffs, we got 90 days or so to negotiate, that maybe the worst of it is over. So that in the long run would, I believe, be very solid for equities. The other thing I have my eye on, I love to watch the interest rate space, so that particularly the 10-year note. And, we had that move following the tariffs being delayed, and the next 2 weeks, or now it's going on 3, the range in the 10-year note is about the length of an average week. So this is the dance that futures, all markets do, right? You go vertical hard, either up or down, and then it takes a couple of weeks to relieve those extreme conditions. And so there's 2 types of trades that I think about. One, if I got an overbought, oversold market, I'm going to look for a way to sell vol and just do like sort of counter trading strategies. And when all these markets get kind of wound up, we prepare for the vertical strategies. The problem is that everything is moving so far, so fast that the only strategies that are working right now are really kind of counter trading strategies where hopefully as the VIX comes off, times I like selling strangles in times like this when I see the markets move with this kind of speed, with some wide strikes just to capture, just for time to do the work. Because if you look at the charts, It's like you get an up day, a down day, an up day, a down day. There's not really any good trends to ride. And that's common when you see speeds of this. I'll tell you one thing. Back in '87, when Greenspan said irrational exuberance, these are the kind of moves we saw then. This has happened maybe 4 or 5 times in my life where I've seen extraordinary moves. And what followed is this choppy, trendless trade, where as an option trader you can make money on time decay. As a directional trader, it's pretty tough business, and that's why I'm telling people maybe you step away for a while, or just trade with options, or go to the micro contracts in the futures, until the market kind of catches its breath.
Yeah, we're all living through irrational exuberance on steroids right now, John.
Yeah, right. So, yeah, you know what? Gold intrigues me because that's telling me that because it's a haven trade, right? The gold was rallying out of fear and chaos and conflict, and maybe some of that's going away. That's why we're seeing that dip. So that to me means there's hope. And I think the other thing, a market that I see that's moving really in an extreme way is natural gas. I've been dying to try and pick it off and buy it, but I don't know that I'm not getting any signals that buyers consider that market cheap. But it is definitely oversold, just like gold was overbought, and now they're starting to get more into normal price action. It'll take a couple weeks or a week before we might get some really strong directional signals again.
Let's take a look at some of those signals that we're seeing out there this week, listeners. Let's go green. Let's keep things positive. Dare I say it, exuberant out there, unless you're heavily short, in which case you're not too happy about these. We're going to do a top. This is really going to be a 6 or even 7. You'll see why in a second, listeners. But we got some interesting movers there to the upside this week. Number 5, listeners, we've got our old pal Lean Hog. So we're kicking things off in the livestock. Bet you didn't think we were going there, did you? Which is, again, it's why it's such a fun week. Everything's lighting it up, it seems like, this week. So number 5, Lean Hogs up almost 5.5% just this week, 5.46%. And then we've got number 4, but it's a two-parter. You'll see why in a second. A Bitcoin popping hard. In fact, we did see a pretty aggressive upside move across the top of the tape in the crypto market this week, which has been kind of fascinating. Bitcoin, the big futures, and the micro both up about 11.68, 11.69%. Right above them, we go to the number 2 in the crypto space, which is Ether, both the micro and the big futures, again, up about 11.8% this week as well. So you can see a lot of overlap there from those two products. And then number 2, listeners, we go out to cocoa. So once again, we're moving all over the place. Cocoa up 12.81%. And the number 1 big dog on the block this week, you might have thought I was going to say, I don't know, maybe you thought I was going to say some of the crypto names. Maybe you thought an equity, given the wild swings we're seeing out there. You knew it wasn't going to be gold. Might be in the other direction, if anything. But no, throw all that to the side. It's dairy, dry whey, listeners, up 14.29%. Just a wild smorgasbord of products just to the upside so far this week. John, anything catching your eye in our upside movers this week, sir?
Yeah, the 10-year note, actually, because we have the Feds, we're going to hear from the Fed in 2 weeks. I don't see I don't see a great opportunity to get, well, certainly not get long, but I think the 10-year note it just topped out at a very good resistance level, and I think it's got a nice move lower coming before we hear from the Fed. So I'm kind of betting on higher interest rates and lower prices in that space. And today I had a session today that I have every day, and I'm at a crossroads when it comes to the equity indexes. I'm kind of thinking I'm supposed to be shorting those, and the simple reason for that is they're overbought. When I look left at my charts in the S&P, I find very good resistance at today's highs around 54.75 or so. We've been up there 4 times now, and sellers have shown up each and every time. So yeah, I'm kind of on the idea. I've got an opportunity to counter trade the equities, and 10-year note as well. Looking for higher rates and lower S&Ps tomorrow. And I'm telling you, I'm just day trading though, guys. These are not long-term trades for me. A long-term trade is about an hour right now. So it's I just pick and choose when I see a good signal that I got, and I did get a good signal today for the S&P that I take advantage of it. But like I said, they're very, very short-term oriented. Certainly not thinking about taking any trades home. It's just not that environment, and I don't have a big enough account to handle that kind of margin that would be needed to get involved in the S&P. I don't know what the margin is, but I'm guessing it might be closer to $10,000 instead of the old 5 or something right now. So very expensive to play, but also expensive on my chart. So I'm kind of looking to offer S&P's 10-year note. I was and I've been looking at crude oil too, and I kind of what I saw today, it cheapened up a little bit. It looks like it just hit a good high too. Third time up is a charm, and so those are the three I think that I'm focusing most on. The move that I was really hoping for was a short in gold, but that happened so fast. I never got a chance to get involved. I mean, and it already moved. It's already oversold. So I don't sell oversold markets, and I don't buy overbought markets, which is just tells you that I haven't traded a lot lately. That's all we've had is overbought and oversold.
I think you said it all right there when you said a long-term trade is an hour in these markets.
Right.
That just shows how wild things are. Again, listeners, I know a lot of you are coming to this show. You're on the options side. You may be a little bit newer to futures. These are not the markets to dive into for the first time. Take your time, watch, learn, keep your powder dry, wait for those good opportunities because, yeah, these are markets where even pros fear to tread sometimes. So be very careful out there, listeners. All right, to the downside we go now, listeners. What's lighting it up to the red this week? You may have some guesses to this one as well. You might be surprised. Number 5 to the downside this week, listeners. It's another rough week for rough rice. When isn't it? Off 3 1/3% this week. Number 4 going out to energy, but a lesser heralded subset of the energy complex these days. Ethanol. Remember when ethanol was all the rage? Everyone was talking about it like it was the future, going to solve all of our energy problems. How'd that work out for everybody? Number 4 to the downside, ethanol off 3.58%. Number 3. So we started off in ags. We're going to energy. Now we're off to the metals, listeners, but not your gold or some of the other shiny stuff you might have thought of. No, it's palladium. Off 3.83%, listeners, for the number 3 spot. Number 2, John was just talking about it. In a normal market, this one's usually dominating the tape. In wild markets, who knows? All bets are off. It is nat gas off 8.63%. And our number 1 downside mover again this week, I bet you didn't have this on your bingo card, given how much everything else is moving right now. Yeah, it's OJ, our old pal OJ. Taken a wee bit off the top this week. Number 1 to the downside off 8.84%. And before you chime in and say, wait a minute, what about gold? You just talk about how gold is falling out of bed. You are correct. Gold is falling out of bed today, but that just shows you how wild the trade has been out there this week. Because if you go back to the start of this week, it's still up. It's up 1.61%, even though it's fallen out of bed over 100 handles today. I think about 3.6% just today. It's still not enough to undo all the gains it had for the week. So just a wild time out there in gold and just about everything else. John, anything catching your eye in our downside names? I know you already talked about nat gas, but if you have anything else you want to add there, or maybe you're a big OJ guy, or maybe you're big on ethanol, or rough rice or palladium, sir? Anything catching your eye in our downside movers this week?
I did trade palladium like maybe twice in my life and found that it was very illiquid. So if you're going to get involved in palladium, it's not so hard to get in trades, but getting out, it's a pretty illiquid market. Just be very, very careful if you get involved in it. I do, of the ones you mentioned, natural gas is the one that I'm intrigued by most because it's the most oversold, and I get that sort of entices me to look for like 3 conditions to counter trade a market, and neither are showing up yet. So I'm just, holding back. And gold, believe it or not, because it moved like the length of 2 weeks in 2 days, I'm kind of itching to buy it again, believe it or not. And I know I sound like a terrible contrarian, but I just, in my experiences, that when I buy overbought markets, I usually get beat up. And if I sell an oversold market, I would say 4 out of 5 times I'm going to lose money. So that's a lesson, was tough to learn. So that's why I'm, laying off these trades. I did want to say one other thing for you that I was seeing, and it was in wheat today. Wheat started to get hit, and it had been going sideways for a good week and a half. Well, soybeans is too. So, guys, if you're looking for a market that has breakout potential, take a look at soybean. It's wound tight because it's a grain. All the financials are the markets that are crazy. But the grains, that's one market I found where looks like there's a trend trade opportunity in soybeans, and you can take a look at that one. To me, that's the other one I have on my card. I've got 7? I've got about 8 days now. It's been in the length of an average days range. So to me, that's a sign of pent up energy. And I don't know, with wheat going down, will it drag down soybeans with it? So I'm kind of leaning on a short there.
Yeah, soybeans have been wild of late. Soybean oil, all the different aspects of the complex on fire. Obviously, a lot of that buffeted by the trade war going on out there. So a fascinating complex. The rest of the ags, I won't say have been sleepy by comparison, but they haven't been exhibiting the same levels of vols we're seeing in other complexes. With it seems like the exception of soybeans. They've been on a bit of a wild ride of late. So definitely a good complex to keep an eye on. Good points there, John. Let's keep rolling out there. Let's see what's lighting it up on the tape today in terms of volume, listeners. Is it a banger day? It's decent. It's pretty active, but it's not maybe as explosive as you might expect given the massive intraday swings we're seeing out there. Again, some of this is just the market is starting to get used to 100 plus intraday swings in the indexes and all the commensurate action. Even gold's not that wild, even though it is selling off pretty aggressively. But, I'm burying let's get to it. I'm giving up spoilers here. Let's get to it. Let's do a top 15 because there is some interesting stuff out there. And also because we kept the micros in just to give you the broad spectrum of the market today, listeners. Number 15, we're kicking things off in FX. It's the yen. Again, these are all June contracts with the exception of one. I'll point it out when we get there. Can you guess which one it is? I think you probably can if you've been listening to the show for a little bit. It's the yen, number 15, 256,000 contracts on the tape as of right now. So it costs you pretty much a little bit north of 250,000 contracts to break into our top 15 this week, listeners. Number 14, we got keeping it in FX. We're going to the euro, 290 on the tape there. Number 13, out to the land of rates. Don't worry, not done with rates. This is just the first of many. It's the Ultra T-Bond, 334 on the tape for number 13. Number 12, to the realm of energy we go. WTI, 353 on the tape. Number 11, so not even in our top 10, listeners. That is kind of fascinating. It's gold, 354,000 contracts on the tape for gold. You'd expect in the day when it's kind of fallen out of bed, maybe a little bit more action out there. But like John mentioned, the move was so aggressive and so rapid that unless you were there right at the onset, you kind of missed it. So maybe there's some of that as well. It's so wild that people are just taking their ball and going home. But I mean, it's active, obviously, don't get me wrong, but maybe not as active as you might expect. Not even in the top 10. What is in the top 10? Number 10, listeners, our only D's contract on the board today. It is 3-month SOFR. Did you guess it? Again, you probably did if you've been listening to the show for a while. 537 on the tape, so we're leaping already north of 500,000 to break into the top 10 today, listeners. Number 9, back to the rates. It's the 30-year, 562 on the tape there. Number 8, the NASDAQ E-mini. So off to equities we go, 590,000 contracts on the tape. Number 7, back to rates, the Ultra 10-year, 614 on the tape for number 7. Number 6, keeping it in rates, it's the 2-year, 899 on the tape, just a tick Just a tick, listeners, under 900K. Number 5, it's the S&P E-mini, 1.38 million. What could possibly beat the S&P E-mini? How about the micro? 1.46. Again, take the micros with a grain of salt, listeners. We usually don't include them, but we're keeping them in today just to give you a sense of what's going on out there. It's the S&P micro, number 4, 1.46 million. Number 3, back to the rates. It's the 5-year note, 1.57 million. Number 2, the NASDAQ 100 micro, 1.78 million. And the big dog, did you guess it? You probably did. It's the 10-year. Not much can really unseat the 10-year. We had one aberrant scenario recently where a micro kind of kicked it to the curb, but again, a micro, not the same thing. Either way, the 10-year note closing in on 2 million contracts already, 1.98 million. I'm sure if I racked it right now, it might be a little bit north of 2 million. So a lot going on out there. John, anything catching your eye in our list of our top 15 expanded most active futures today, sir?
Well, I'm a big fan of the 10-year note. I think it's one of the best contracts in the world. It doesn't have the noise that the 30-year bond does. It moves a lot. I spent a lot of time in the 30-year bond pit, and the 10-year note is, I mean, everybody watches it, and it usually has the most volume. So I stick to liquid markets for as much as I can. So the interest rate space is my favorite, followed by the equities, gold, all the ones that I was talking about. I think that there's some opportunity here in gold. Absolutely. 10-year note. Absolutely. So I'm coming into this thing tomorrow, wanting to, another thing about the 10-year note, guys, you should know that, it's been strong and it's starting to weaken along with gold. Both those markets are where money flows when there is conflict, chaos. They are known as the havens, right? A flight to quality. And both of them are shifting down. So, I'm favoring the short side there. There's good resistance levels, and the volumes are great. And I'm not quite sure what to do. These other ones, yeah, I might mess around with the micro S&P if I get a good read tomorrow. But I just haven't had very good reads because the markets are moving so erratically. I just avoid them.
We can't avoid, listeners, the year-to-date trends out there. Again, we're living a whole month's worth of action in a few hours sometimes out there in the markets, listeners. So the year-to-date trends, even though it's only part of the way through April now, listeners, we still are seeing entire years worth of movement, if not more, in many products out there. Let's go to the upside first. We expanded it, listeners. We did a top 6. You'll see why in a second. Number 1, kind of a bit of an outlier. Again, can you guess what it is? Numbers 5 this year, really 6 to the upside so far year to date, listeners, is silver, up 13.5%. So I know people have been lamenting that silver isn't really participating in this massive gold rally that we've seen of late, but it's still a good year in silver. You're still better off owning silver than, let's say, most of the Mag 7 right now, listeners. So just something to bear in mind. Silver year to date up about 13.5%. And the number 6 spot, number 5, soybean oil, as John was just saying, soybeans on the radar out there. In particular, the oil here at number 5, up 18.1% for the year. Number 4, going out to the metals, but we're getting base. It's high grade copper, up 19.5%. And then number 3, you might say only number 3, but that's where we are right now, listeners. It's gold, up 22.5%. It was number 1 last week. What kicked it to the curb? Well, it's coffee, taking its 2/really number 1 spot back, listeners. It's coffee, up 25.06%. No welcome news there for all the Starbucks fans out there. And I say number 1's kind of an asterisk. You'll see what it is. It's the VIX futures again, listeners, up 37.5%. The reason why I say that's an asterisk is because vol can move that in a day sometimes. So where it is right now, year to date, is not where it's going to be in a week, let alone a month. So a bit of an outlier there. Nonetheless, it is an actively traded future, so we have to include it there. But in reality, I would say our real quote unquote number 1 is coffee. Gold and coffee kind of fighting for that number 1 spot. Obviously, the sell off today not helping gold's chances. So gold falling to really a number 3/2 on our upside list. And we'll go to the downside as well. And I see some of you have some questions. We'll get to those in a minute as well. But to the downside we go, listeners. And again, we had to expand this one out to a bottom 6. You'll see why in a second. Number 5/6 is cocoa, off 14.78% for the year. And then number 4, really, listeners, is one of the EMs. It's lithium, off 15.51%. Number 3, going out to the land of dairy, it's our old pal Dry Whey, off 26.5%. That puts today's, or I should say this week's move in contrast, because it's up about 14.3% this week. So gaining back a lot of what it lost. But even with that move this week, it's still off 26.47% for the year. So a rough year for the dairy fans out there. And then number 2, listeners, our old pal OJ, you know by now it's been a rough year for them, off 41.1%. And then what is in the number 1/2, the tie spot for the top of our list, listeners? You know what it is by now as well. It's Ether, the big and the micro futures, off about 48% each. That sounds terrible, and it is, but it's gained a little bit back since the start of the week. So maybe that can allay some of your fears. Like we mentioned, it's up about 11.8% so far this week. So not quite as bad, not off more than 50% like it was last week, but then it's still off about 48%. So read into that what you will. And John, we talked about a lot of these already, so I won't make you call them out, but we do have some questions coming in. So let's get to those now. A little bit of the old futures free-for-all.
Ring the bell. It's time to take on all comers in an epic Q&A battle royale. All questions can enter, but none can leave without an answer. It's time for the Futures Free-for-All.
All right, listeners, welcome to the Futures Free-for-All. You folks can join us a variety of different ways. If you want to send in questions ahead of time, at options on most major social media platforms, questions at theoptionsinsider.com also works. Of course, if you want to join us live for the show, ask questions live during the show, head on over to the pro, theoptionsinsider.com/pro. That'll get you access to everything we do, including the live stream and the live chats during the show. John, we got a bunch of questions coming in, so I'll just let you have at them. First off, a lot of people were asking about gold earlier. You already kind of gave some of your thoughts on gold, but a couple people chiming in. Nichols hoping you talk about gold. Yeah, we did. Mr. Unlimited asking, do you think the top was in for gold just north of 3,500? This is obviously the $1 million question everyone has right now, John. We saw, of course, that new all-time high a little bit north of 3,500 just pretty much earlier this week. Now, obviously, falling out of bed. Mr. Unlimited, a lot of others want to know, do you think that was it? I mean, it sounds like you said it's oversold, so you might want to buy it. Do you think we have upside back north of 3,500, or what are you feeling in gold a little bit longer term, sir?
Yeah, I don't. I would bet against it, taking that out for a little while, because the negotiations with tariffs seem to be going pretty well. I think it would be difficult for gold, not only technically but fundamentally, to bust through that level unless there's some kind of crazy event that occurs, and I'm betting against that. I'm kind of thinking that, it moved twice the length of an average week in 2 days. So I'm thinking somewhere between 3,250 would be a very good support zone, and somewhere around 3,450 would be probably good resistance. We did see sellers show up there a couple times on Monday and Tuesday, so I'm sort of leaning on that 200-point range to contain volume for a good week and a half or two.
All right, you got a few more products in you, John. We got some more questions coming in from the live folks. Let's go out to who was next here. Option God. Going back to the equity indexes, John, you were talking about doing some shorter duration, less than an hour trades in the futures, understandably so. Option God has a question, though. He says, where does John feel comfortable buying the S&P 500 or other indices right now? I'm assuming he means on a little bit longer term basis, not quite the 1 hour time frame we were joking about earlier. If you were to take a little bit, it doesn't have to be 5 years. It could even just be a month or two, or maybe a few weeks. If you were to start nibbling on the S&P for a little bit longer level, where would you think are some comfortable levels for you, sir?
Okay, so let me just go back a little bit to the day the tariffs were delayed. And so what I want to look for there is, in all that volatility, the lowest dips that occurred there, to say, okay, this is where buyers were enticed to come back in the market. So I'm going to say 5,200. I know that's a long way away today, but how we can do that? We can do that in a day. I mean, an average day range is 245 points right now, which is crazy. So, yeah, I'm thinking between 5,200, and I kind of like where it topped out at today. I'm not going to be selling it. I may if I get a certain signal tomorrow. Like, I like when markets extend after the first hour. So if I see an extension down after the first hour, like a new low, that'll be a trigger for me. Or if I see an extension higher after the first hour, that's often an indicator that the institutional traders are leaning that way. It's something that I learned in the trading pit. You know, the most liquid time of day is in the first hour. So when you're really looking to get an idea of who's in control of momentum, that first hour extension is revealing. And so that's what I'll be looking for tomorrow. If the S&P extends lower after the first hour, I'll jump on that and try and make a little bit of money on the short side. But longer term, I like 5,200 as a good support zone. And I believe 5,500 or just right around there should be really tough to bust through. Just one other thing I want to talk about, since we're on the S&P, I opened up a chart I did this weekend, and the first 3 days of April, or the second quarter, S&P moved 85 points. An average quarterly range is about 60. So that's how extreme these markets are, that we've already surpassed an average quarterly move in the first 3 days of this quarter. So this is why I'm in sort of counter trading mode when it comes to these. And that's why I stay very short-term oriented, because getting a 2 or 3 day trend is a pretty difficult thing to catch. They don't come around very often.
There you go, listeners. The data doesn't lie. These are wild markets. So unless you're comfortable with a whole heck of a lot of vol, maybe be judicious. Keep some powder dry. Look at some levels if you're looking to get long. Maybe some lower levels. Talk S&P. John was just talking about levels where he's comfortable out there. And again, there's not a lot of set it and forget it trades right now. You got to stay on top of everything you're doing out there. We got another one here, John. We're just jumping from product to product, which I love. It shows these markets are top of mind for everybody, John, all over the place. Nichols has a question. It says, does John have any thoughts on the big crypto move this week? A lot of upside. Yeah, John, I was just talking about this at the top of the show, but I saw this question come in, so I wanted to kind of save my thoughts. But yeah, just a huge move in crypto this week. We talked about it, the upside movers. We have Ether at number 3, pretty much up 11.8%. Bitcoin right behind it at number 4, up about 11.7%. So a wild week. In the past, when we've seen a lot of whipsaw action and a lot of downside in the equities, the correlation tends to increase when it all hits the fan. But we saw Bitcoin and crypto starting to move up even when the S&P was selling off in recent sessions, which is kind of interesting. And again, not what we've traditionally seen out there. And now it's continuing that move to the upside. Do you have any thoughts on the big crypto move we're seeing out there?
Yeah, it's awesome, and it's fast. I would say too fast. So just, counter trading, overbought or oversold. What I do is I'm looking at BITO. It's an ETF, BITO, Bitcoin strategy. And I actually had a signal for coin, that ETF, and obviously the futures came in too. So when I'm looking left on my chart and I go, am I seeing resistance in Bitcoin or anything? I'm really not seeing a whole lot here. So I wouldn't jump in front of this. I know so many people are really, really bullish on this, thinking it should be well over 100,000 at some point, and I'm sure it will be. But to jumping in at this time when it's run this far in a short period of time is a dangerous. It looks euphoric, and it is euphoric. That's exactly when you don't want to get involved. When the race is already run, you got to give it some time to coil up and build up some energy and maybe get going again. Like I said before, I cannot jump in on markets that have moved this length in such a short period of time. And I'll also be honest with you. Normally, I really look at the fundamentals in pretty much every market I watch. I'm not real clear why everybody's a big fan of this all of a sudden with the stock market. Right? Maybe it has something to do with I just don't know. I honestly wish I had a better answer for you, but technically, this is not a market that interests me right now.
Well, John, we did a lot of living on the show today. I don't think there's any complex we didn't touch. We went all, maybe we didn't throw lumber onto the show. I guess that's about it, right? Yeah. But really, everything else lighting it up. It's that kind of week. It's those kinds of markets, listeners. Listen to John. He said he's been doing this for 40 plus years, never really seen anything like it. We're seeing quarterly average moves in just a couple of days. The lifespan for a long-term trade right now is within an hour, if not less. These are all code words, listeners, for be very cautious out there right now. That said, John, if folks have more questions, clearly they do, and they want to reach out to you, see what you're cooking up, where should they go? What should they do, sir?
You can contact. Well, I have a website called macrograph.com. It's kind of a unique charting system I put out there. I also write newsletters. So if you want to get a hold of me, you can catch me at J Seguin Seguin at markettaker.com. That's 2 T's. Yeah, and I'll be happy to answer any questions. But also, yeah, if you want to go on my website, check it out. And if you're interested in a very unique charting program, I teach classes on that stuff too. So more than, just check it out and register, and I'll get back to you.
There you go, listeners. Check out his charting tools. Some interesting stuff. You can also give him a follow over there on the old Twitter/X at Chi-Town Futures. All one word. That's going to do it for us on the network today. Back again tomorrow for our usual Thursday doubleheader of the option block in the morning with the Flowmaster, followed by This Week in Futures Options with our friends over there at CME. Who's going to join us in the CME Group Hot Seat? You got to tune in to find out. And then on Friday, should be a banger. A good buddy, Dr. Vix, joins us to talk all things vol. Wild week. We were off last week, obviously, for the Good Friday holiday, so we got 2 weeks worth of vol to cram into one show. After that, we come back one exclusive time for you folks out there in the pro, theoptionsinsider.com/pro, to talk about the unusual activity that's caught our eye for the week on Options Oddities. It's a great show. Check it out if you haven't done so yet. Then we're back again next week, all the way through to next Wednesday, another episode of the Futures Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.